The market hit new all-time highs again today with the S&P up 1.13%, closing at 6445.76. The 6450 gamma exposure concentration was the outstanding 0 DTE GEX level, basically right from the open. So we had plenty of advance notice that the 6450 level was a target by market participants intraday, and we certainly came close to that level. In terms of the larger gamma exposure picture, we continue to see the 6500 GEX level remaining a prominent strike, and this does appear to be a target for market participants at some point during the month of August. I will also point out that we continue hugging this 50-period EMA on the 15-minute chart. This is something we've been discussing in our live stream, which, by the way, I'll put a link down in the description if you guys are interested in joining that. But the 50-period EMA on the 15-minute chart is a great intraday trend indicator, and you can see all the times just in this most recent trend that this has provided an area of support, and we saw this again this morning heading straight for the 6450 gamma exposure level. In one of our recent YouTube videos, we mentioned our GEX weighted volatility gauge. This shows us that implied volatility on the S&P 500 has only been lower 9.9% of the time in the last year, so extremely low implied volatility while extremely high gamma exposure. So we're in a very positive gamma exposure environment. This is extreme by the dip, total gamma sitting at 2.2 billion on the S&P 500 and almost no net negative gamma exposure. So this doesn't mean that the market goes straight up, but what it does show us is that any dips are likely to be bought by market participants in this type of environment. Low volatility and extreme positive gamma exposure.
Thanks, Anthony. As has been customary recently, let's take a look at IWM, which had a really big day today, especially relative to the other indices. I had mentioned in prior days that I wanted to see this whole moving average on the weekly chart just below 226. I wanted to see that level tested, and sure enough, we bounced right off of the 9-period SMA today and closed above the hull with a big green candle. And so while a lot of people may be celebrating that the market appears to be breaking out, for me, we are just now entering the area where I'm starting to get more watchful. I'll just point out a few historical things. Whenever we see IWM reach positive GEX recently, that's actually been closer to short-term tops instead of periods where IWM is about to break out. So it may be different this time, but I think this may signal that shorts are out of the way, and actually that could be a contrarian signal. So we want to watch this breach over the zero line on net GEX, with GEX going positive for IWM.
Thanks, Sean. There's a lot of names moving today, but Amazon was not one of those. Only up 0.08% today, closing at 221.47. And really, ever since its earnings release, Amazon has been consolidating right around the 50-day EMA, currently at 218.82. That's denoted by this red line here on our chart. Amazon just hugging that line. The gamma exposure is all concentrated at this 220 strike. We did note in our live stream this morning that gamma exposure at some of these higher strikes has been growing all the way up to the 250 level. So I think after this period of consolidation is over, we could see a breakout in an attempt back up to recent highs, somewhere in the 235 to 240 range. I'll also just point out that the options volume we saw today was pretty heavy from the 220 strike and above. So we're seeing a lot of volume coming in, up to 60,000 contracts at the 225 strike, as well as the 230 strike, over 40,000 contracts. You can see that here on these blue bars. So all of this volume coming in is basically showing that market participants do have an interest at these higher strikes, and a lot of times after these consolidation periods, we do see a breakout into those higher gamma exposure levels. So we're going to continue monitoring to see whether or not the GEX levels grow at some of these higher strikes. For our part, we did initiate a wheel strategy on Amazon today, which, by the way, you can track our trades in real time by becoming a member. I'll put a link in the description below for you guys to check that out.
All right, let's take a quick look at the VIX. GEX still not shifting lower despite the VIX absolutely getting crushed today. below the weekly whole moving average, which is rare in recent history. So we're below the 1522 area, all the way down to 14.73, over 9% drop in the VIX today. Hey, at this pace, maybe we'll be at 10 by the end of the week. I actually don't think that's very likely. This year, until this point, has seen the 14 to 15 area has been important support for the VIX, if you want to look at it as support. We still have volume at higher strikes, almost exclusively, including pretty high volume at 30 today. And GEX is pretty singularly concentrated at this 15 strike, a negative GEX at 15, small GEX clusters all the way up to 25. Certainly an indication of some level of hedging. Market participants are one-sided, bullish on the indices right now and shorting the VIX. This is how big spikes can occur, but that also means going against the current trend. So we want to watch that weekly whole moving average that I pointed out earlier on IWM also reach today on QQQ and SPX. So I think in the next day or two, we'll see a pretty definitive decision made regarding whether the market's going to blow off toward even higher levels, or if we're going to see a pullback, and maybe one that ends up seeing a little bit more momentum to the downside, given the important spot that we're at.
Thanks, Sean. Let's take a look at Caterpillar. Caterpillar up 1.02% today, closing at 412.71. Caterpillar's been in a bit of a downtrend ever since it hit the 440 level just a few weeks back. Had its earnings release and had some more negativity come into the stock, but it's reaching a very important area here just above the 50-day EMA, currently sitting at 398.33. And we see this area between 410 and 412 has been previous resistance going back to the beginning of the year, the end of last year. You can see multiple times this zone has been an important resistance point, which we think could turn into an important support level as we're coming down into this range. The gamma exposure data is pointing higher. We see positive gamma exposure from the 420 strike all the way up to the 450 strike. Not a whole lot of options volume. The options market in general for Caterpillar is a little bit less liquid than a lot of the other names that we often look at. But I do think just the strength that it's had since the early April lows until now, this pullback in Caterpillar actually looks like an interesting spot to potentially put on some risk. We're going to be looking at various option strategies to take advantage of potential further upside in Caterpillar in our portfolios, assuming that this does become a support level. So I'd like to see at least one more positive day where we get a higher high and a higher low, and I think that could be an important signal for entering a position and putting some risk on in our portfolio. And for a limited time, you can get $300 off our yearly portfolio manager tier subscription. Use code SUMMER2025 at checkout. We do have a few spots remaining, but this promotion ends soon, so definitely take advantage of it while you can. Members get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies, and you'll also get access to the premium channels in our Discord community. You can track our trades in real time and get ideas from other traders sharing their own trade setups as well. I'll put links to all of that in the description below. Thanks so much, everybody, for watching. We'll see you guys in the next video.